Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 27th, 2025, and we're diving into Scotiabank's second quarter earnings report for 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Scotiabank's latest earnings report provides a comprehensive look at their financial performance amidst a challenging economic environment. I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Scotiabank reported a total revenue of $9.08 billion for Q2 2025. John, how does this compare to their performance last year?
Scotiabank's revenue increased from $8.347 billion in Q2 2024 to $9.8 billion this quarter, showing solid growth. However, net income on an adjusted basis was slightly down to $2.72 billion from $2.105 billion last year. The adjusted EPS came in at $1.52, which is a bit below last year's $1.58, but above the forecasted $1.14 by analysts.
And what about their return on equity?
The return on equity was 10.4%, down from 11.3% a year ago. This indicates a slight decrease in profitability relative to shareholders' equity, but it's still a respectable figure given the current economic conditions.
Segment performance and strategic initiatives. John, can you walk us through the performance of Scotiabank's different business segments?
Absolutely. Canadian banking saw a significant decrease in earnings to $613 million, primarily due to increased credit loss provisions. On the other hand, international banking performed well with earnings up 7% to $719 million, thanks to solid revenue generation and lower credit loss provisions. Global wealth management also showed strong growth, with earnings up 17% to $407 million, driven by higher mutual fund fees and brokerage revenues.
And I see they announced a dividend increase.
Yes, Scotiabank declared a dividend of $1.10, which is a 4% increase. This reflects their confidence in maintaining strong capital ratios and their commitment to returning value to shareholders.
Credit risk and capital ratios. Credit risk is always a critical area for banks. How did Scotiabank manage this in the second quarter?
Scotiabank's provision for credit losses increased to $1.398 billion, reflecting a more cautious stance due to macroeconomic uncertainties. Their total allowance for credit losses rose to $7.276 billion, indicating a proactive approach to potential defaults. Despite these challenges, their Common Equity Tier 1 (CET1) capital ratio improved to 13.2%, showcasing a robust capital position.
What about their impaired loans?
Impaired loans decreased to $6.849 billion, which is a positive sign. This reduction was mainly due to lower formations across most portfolios and favorable foreign currency translation impacts.
CEO insights and future outlook. Let's talk about the leadership's perspective. What did Scott Thomson, the CEO, have to say about the quarter and the future?
Scott Thomson emphasized their strategic focus on building deeper, advice-driven client relationships. He acknowledged the uncertain economic outlook, but highlighted their strong balance sheet and readiness to support clients and seize growth opportunities as they arise. This strategic clarity is crucial for navigating the current economic landscape.
It sounds like they are well prepared for the challenges ahead.
Indeed, their strategic initiatives and strong capital position should help them weather economic uncertainties and capitalize on future opportunities.
Key takeaways. To wrap up, Scotiabank delivered a solid performance in Q2 2025 with strong revenue growth and a strategic focus on client relationships. Despite some challenges, they increased their dividend and maintained a robust capital position. John, any final thoughts?
Scotiabank's ability to navigate economic uncertainties while focusing on strategic growth is commendable. Their strong capital ratios and dividend increase are positive indicators for investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Scotiabank's performance in the comments below.